Hello and welcome to our channel Investment Ventures, where we bring you educational videos and investment ideas from the Indian stock market. Today we will be covering the IT sector and picks within the IT sector from large caps, mid caps as well as small caps. Okay, so let's go through the boring disclaimer first. I'm not going to read this out this time, so you can view it on your screen. Do subscribe to our social media channels, especially YouTube, where we will be uploading latest content first on YouTube and then on the other Facebook and Telegram channels. Okay, so regarding the IT sector, first of all, thank you to all who responded to my poll, and we saw three basic distinct themes come up. One was chemicals, one was electric vehicles, and the third one was, of course, the leader was IT, the IT sector and IT services. I went through a total of 198 stocks and used some filter criteria to filter the stocks out. Number one, of course, it should belong to the IT services sector. Then I used the debt to equity ratio. Now, I did not go down to the 0% level. I went down to 0.3 because 0.3 is still a manageable debt to equity ratio. Otherwise, you can miss out on companies which just borrow very small debt for taxation purposes. So that's the reason I selected 0.3%. I also looked at promoter stake. So a high promoter stake would get preference in this criteria. Then I looked at the cash balance of the companies compared to its market cap. So what is the cash holding of the company at this point in time? Or probably this is somewhere close to December. And then I also looked at the other valuation criteria, like what are the growth prospects, what is the price to earning ratio currently, and what's the price earning growth ratio. So based on those, I have filtered my selection. So let's look at the IT services sector, the large cap names. The top 6 names, of course, are TCS, Infosys, HCL Technologies, Wipro, Tech Mahindra, and Larsen & Toubro Infotech. Now, all these are big brands, big companies, the leader being TCS, which is close to double the size of its closest competitor, that's Infosys. Now, if I look at the stock price, how they have run up, what is the valuation criteria? Although we like TCS and Infosys, but from an investment point of view, I would look at the next year, or probably, of course, they are large caps, but within that, I would look at the next criteria. That's what is its price to earning ratio currently? Is there any change being implemented? So based on that, from our investment choice, we would recommend Wipro because they are having a big focus on digital channels now, as well as they have changed the CEO, and the CEO in North America has been driving towards change. There is a lot of scope in Wipro, promoter stake being very high, so there's low floating stock in the market. Price to earning ratio is also on the lower side, so there is ample scope compared to the other large caps which are growing faster than Wipro, but then their PE ratios are also much higher. So you can try Wipro for that additional delta, although there's nothing wrong with TCS or an Infosys. And then the other choice we have is HCL Technologies, because that has also made a niche in the infrastructure space, and the share price as well as the company has been doing excellent. They've been providing bonuses to the employees. They've been also rewarding their shareholders over the last 1 year. So I would definitely look at HCL Technologies. And if you compare, although they have cash which is on the lower side because they have been using it to reward their shareholders as well as reward their employees, Wipro has a lot of cash on its book. Some of this could have been used during the buyback, but again, they have been generating cash every quarter. So in the large cap space, we have Wipro and HCL Technologies. Moving on to the mid caps. Now mid caps was where I considered the market cap to be lower than 35,000 but higher than 10,000. And we have names like Emphasis, Mindtree, L&T Technology, Oracle, Coforge. Coforge is erstwhile NIT Tech, Tata Elxsi, Tanla Platforms, and Persistent Systems. Now, even this analysis has been based on the filter criteria that I had mentioned in the beginning. Now, from an investment perspective, we like Coforge, Tata Elxsi, and Persistent Systems. Now, Coforge, like I said, is erstwhile NIT Tech, and it has been taken over. The company has been taken over. They are growing substantially. They are doing well. So that's one of our preferred picks. Although it has a high PE ratio, but the growth has been phenomenal compared to the other companies. The other one is, of course, from the Tata Group. That's Tata Elxsi, and this stock has also been running away. So we do like the company as well as its growth prospects. If you see the quarter-on-quarter sales growth, it is at 12%. Tanla was another one which has excellent sales growth, but the stock price has been crazy. So I would not want to touch it at this point of time because the stock has gone up from 200, 250 around to 1,000. So definitely not something that we want to get into at this point in time. And the third choice we have is Persistent Systems. Again, growth has been good. The PE ratio is slightly on the lower side compared to Coforge and Tata Elxsi. And the cash balances for all these three companies are reasonable compared to its market cap. So if you see Coforge, it's got 900 crores. Tata Elxsi has got 660 crores, and Persistent on a market cap of 12,000 has got 457 crores. So you can expect rewards coming in from these companies also for their shareholders. Lastly, we'll look at the small caps. Now for the small caps, I took a criteria which is below 7,500 crores or below 10,000 and filtered out good companies from there. Now we looked at Cient, First Source Solutions, Zensar Tech, Birlasoft, INFY, Intellect Design, Vakranji Software, and Sonata Software. Now, if I look at the cash balances again of these companies, Zensar Tech and Birlasoft has got the highest cash balance on its book. Its quarter-on-quarter sales for Zensar, it's not been good. For Birla Tech has also been on the lower side, whereas First Source has been the biggest mover here. But in terms of prospects going forward, we do prefer Zensar and Birlasoft, mainly because they are much more reputed brands. In Birlasoft, you'll see a lot of investors like Rakesh Jhunjhunwala as well as R.K. Damani who have made investments in this stock. I'm not sure if R.K. Damani has made, but there were other investors like Ashish Kacholia and these people who have also made investments in Birlasoft and have a substantial holding there. So if you look at small caps, I would still look at it from a relative safety point of view. So I would go with names like Zensar and Birlasoft from the small cap space. Again, although I didn't read out our boring disclaimer, this video is meant for educational purposes, so please check with your investment advisor before investing into any of these stocks. Thank you for listening, and do subscribe to our YouTube channel and hit that bell icon so that you're aware of when the next video is being released. We will be hosting a webinar on basics of options and advanced option strategies. That's coming up soon, so stay tuned for now. Thank you.